Alrighty guys, in today's video we are going to be talking about why I just bought more Rivian stock. Now, I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe to the channel, and guys, don't forget to check out my course if you guys want to learn more about investing in the market. So, what is Rivian? Now, for those of you that don't know what Rivian is an electric car manufacturer that just had their IPO. IPO is really just allowing the public to buy shares of Rivian, and Rivian uses that money to help grow and fuel the business. But over the past couple of weeks, you can see Rivian stock here. If we go look at the year-to-date chart, you can see this thing just popped up, went up about 55%, sold off, and really hasn't done much, okay? So anytime you have a recent IPO, an IPO is going to be very, very volatile. It's going to be very risky. You can see this thing popped up, that 55%, immediately sold off. And the thing about it is it did find support near anywhere from about 110 all the way down to about 106 is the total support. So anytime it hit that price, we virtually got buying pressure every single time. So it's hit it, bought up, got hit it, got bought up. Now, a lot of people always ask me, Carter, should I buy Rivian? Should I buy it? Should I buy it? Should I buy it? Well, I think Rivian right now carries so much potential, but there is so much risk involved just because there's so much competition now in that sector. When you think about electric vehicles, you first think of Tesla. Why wouldn't you? Front runner of the sector. Really, they were the main company that was, getting people interested in the electric auto space. Number two, you think of Ford. Ford is investing billions of dollars into the electric auto space. And then three, you think of other car companies, but you really are thinking of these smaller companies like Lucid, Rivian, and NIO, a variety of other ones that are just a little bit smaller, still carry a lot of potential. But the thing about having so much competition in a space is, one, you're going to be competing neck and neck. So the best product will win. Right now it's Tesla. Tesla has proven to be the front runner of that sector. Two, weak companies will fall out just as fast as they came in. They will be out. Very good example is Nikola Motors. Do you hear of that stock anymore? No, because company's not doing anything. Company was like a big fraud. You'll have companies like that. So there is a lot of risk involved. Not to mention, most of these smaller electric vehicle companies, they don't have any revenue, which is very common, but it's also extremely risky because there's no money, that they can use on the revenue side to help fuel the business. So the biggest thing, why am I buying shares? Okay. So what I'm doing is I'm actually doing dollar cost averaging. Okay. I bought in on the pre-IPO. I made money, kept buying every day pretty much, and I was making money. Then I realized, okay, company's a little overvalued, starting to sell off after this first massive day. Then just started buying once a week, and that's what we have, today. Not to mention, guys, when you are looking at a company like Rivian that carries a lot of risk, you have to be very, very smart with your money. And if we actually look at the chart, you can see it has that very strong support. I'm picking up some more shares right on this support line. You can see hits it every time we get buying pressure. So I think we'll hit it, get a move back up to about 118. I still think Rivian carries a lot of potential, but overall, yeah, a lot of risk. So dollar cost average this thing all day long. That is what I am doing. I think that this is a good investment. And for those of you that don't know what dollar cost averaging is, all you do, invest $10 a week, $20 a week into this. So the beauty of dollar cost averaging is that if the stock goes up, you still got shares and you're going to be making money. But the beauty of it is when it sells off or is consolidating and you're investing on all of these dips. So you're buying here. When the stock recovers and let's just say goes to 135, you're going to be making money because your average cost is so low. You just have to be very, very consistent with your investments, investing maybe once a week, once a month, or whatever you choose. So guys, that's pretty much why I'm buying some more Rivian. High risk, high reward. That's what I'm going with it. Keeping it under about 1 to 2% of my portfolio. Just letting it ride. We'll see you later. Take care.